Hi, I'm sitting here with Tina Steele with VIP Mortgage. Her niche is reverse mortgages, and today she's going to tell us a little bit about what it is, what it takes to get into to do a reverse mortgage, and she's also going to let us know some pros and cons. Good morning, Tina.
Hi there, Vanessa. Thank you for this opportunity.
You're welcome. So tell us about where you come from, how you got into reverse mortgages.
Okay. I've been in the mortgage business for probably over 20 years, and my grandmother did a reverse mortgage up in Washington State about 8 years ago. And I saw what the benefit was for her after my grandfather had passed away. Mm-hmm. And so I kind of walked through the process with her and realized that this was a tremendous benefit for the right person. And so I have been doing reverse mortgages exclusively for the last 7 years. And I think it's just a great program out there to educate homeowners over the age of 62 about this program and see if it can work and benefit them.
So what exactly is the criteria to do a reverse mortgage?
You have to be over the age of 62, and you have to have a decent, substantial amount of equity in the home.
When you say decent, substantial, are we talking
50%?
Okay.
Yeah, 50%. So what that does then is it's a way. A reverse mortgage is an FHA insured program. Mm-hmm. And FHA created this program for people who have possibly been in their homes for quite a while, who are living on a fixed income. And it's a way to take some of the equity out of your home and turn it into cash while you're still living in the house. But the advantage to that is that there's no income or credit qualification, and you no longer have a monthly mortgage payment. You can also purchase a home with a reverse mortgage. So that's a unique product for real estate agents to know about, and homeowners maybe looking to downsize. Maybe they've been in their family home for the last 30 years. They have a sizable amount of equity.
Now, how does one do a reverse mortgage on a new home?
On a new home, so what you have to do is basically you have to have some cash, and so you're establishing the equity position up front. So you're going to put down about 40 to 50% of equity, and the bottom line for your cash required is based on your age. Someone who's at just 62 is not going to qualify for as much of an advantage with the reverse as someone who might be 82 or 92, because it's based on your age and a life expectancy of 100.
Now, is it on your reverse mortgages? Do you have? Is the minimum have to have 50%, or is there sometimes you have to have more depending on your age?
Sometimes more.
Okay.
And the calculation is different for a purchase and a refinance.
Okay. When you go back to do a reverse mortgage on your home, is there any particular kind of loans you don't do with reverse mortgage? Does it just have to have one loan against the property, 2 loans? What is the criteria here?
Okay. So what happens with a reverse? You don't necessarily have to own your home free and clear. Kind of the idea when these were established was that's mostly what people had, but now that's kind of different. So you can have a first and a second position as long as your equity in the home is enough to pay off that first and second. So for an example with my grandmother, she actually did have a first and second on her home. So what the reverse mortgage did for her based on her age and then the value of the home, so there's a calculation done. So she gets the reverse mortgage, it pays off her first and second mortgage. So she had a mortgage payment of about $1,200 was going out of her pocket each month. Well, now that monthly mortgage payment is staying in her pocket. She didn't have a whole lot extra after those 2 liens were paid off, but what it did was allow her to stay in her home. She lived in it for almost 8 years without a mortgage payment. So she had that security of being able to stay there, and that's what she was comfortable with. And then that $1,200 a month that she was paying out each month is now staying in her pocket. So the savings to her was that got to stay there.
So after she did the reverse mortgage, what exactly took place? How does she get the $1,200 back in her pocket? What does the reverse mortgage actually do?
Well, what it did was just paid off those 2 liens that were on her home. So those are gone now. So what she was having to pay with the reverse mortgage, you don't have a monthly mortgage payment.
Right.
So that's why it's now staying in her pocket.
Okay, and what is the guidelines with her with this house now that she's more or less given it back to the bank? I mean, that she's at the bank, buy it from her, and they're paying her to stay in the home. So at this point, what is the criteria that she has to follow now from either now till she's no longer with us, or she decides to, I mean, can she still sell the house? I mean, how does this all work?
Okay, and that's a good question, and honestly, that's probably the biggest misconception with the reverse mortgage, is that you sold your house to a bank, and that's actually not true at all. So what happens with my grandmother is she still stayed on title. It's her house. Any equity that is accruing in her home is hers. So what happened was, let's just say, for instance, her house valued at $200,000, and she owed $100, or let's say the value was $200, okay? And based off that $200,000, maybe she had, let's just make it easy and say $100,000 available to use as, with the reverse mortgage. So what HUD is telling her to do is $100,000 is staying as equity in her home. She's not losing that equity. It's still her title, her equity that's serving as a cushion. They just don't want her to turn that $100,000 into cash. The remaining $100,000 that she has now available, the first thing that needs to be done is the liens need to be paid off. So if she owes, let's say $75,000 in liens. So what she did is now we pay off that $75,000, and she still has $25,000 remaining that she could use as she wants. But what she was paying out from those liens is now staying in her pocket.
Okay.
And the criteria with the reverse mortgage, the two most important things for her to do through the course, or anyone to do through the course of a reverse mortgage, is you have to live in your home as your primary resident, and you have to pay your property taxes. And that's the only lien that can go ahead of a reverse mortgage and then cause a foreclosure on a reverse, is if property taxes are not paid. So those are the two most important things. So now my grandmother is just living in her home, and she is benefiting from not having that mortgage payment anymore. So it's staying in her pocket, and she's able to live in her home, and she actually has a little bit of a nest egg there as an equity line that she can access if she needs it.
How's that work?
That $25,000.
Right.
So the $25,000 that's there, she actually did an in-the-ground sprinkler system for herself to give her some security to still enjoy her garden, but safety issues. So she did that. And she can use it for whatever she might need. Now maybe she's needing to pay her taxes. She could call a lender and say, I am needing $3,000 brought over from my equity line. So if she brings $3,000 from that $25,000 she has available, now that becomes part of the balance that she owes. And then she still has the remaining equity there, and you can use it for whatever reason.
Okay. Now what happens at the time that, if she wants to move from the property, say, and she wants to go purchase another house? Now, what happens if that house has either gained value or lost value? How does that work?
Well, the reverse mortgage is a non-recourse loan. So what HUD is ensuring and guaranteeing with the non-recourse clause is that you can never owe more than your house is worth. And so if that happens, and the idea behind a reverse mortgage is that your balance is going to go up. You're not making a mortgage payment, but interest is still accruing. So how they have designed it and the calculation done, they feel they do the calculation conservatively enough in hopes that equity is still there. But your balance is going up. But if the value grows with that balance, and those can kind of stay together, then that equity position that they said, this is equity in your home, but we don't want you to turn that into cash. So for instance, in hers, $100,000, hopefully that is still there. So the balance is going up, but if her value grows with it, then that $100,000 is theirs at the end. And then if she decides she wanted to move out for whatever reason, she wants to downsize, move to assisted living, or she passes away, then the house is sold for what it's worth. The lien that she owes, the amount on the reverse mortgage, she pays off, and then the remaining equity is hers to take.
Okay, and so if she should pass away, it would be whoever her beneficiary is.
Right,
Is that correct?
Yes, however she might have set it up in an estate or trust or such. But if, worst case scenario, there's no equity left at the end, that you live in this home for, you outlive the loan, let's say you're in it 15, 20 years. And as we all know, the market has fallen. So a lot of people actually were worst case scenario, to where their balance kept rising because that interest is compounding. And that can kind of get ugly the bigger the balance is. And if your value doesn't grow with it, then that cushion is having to be used. And so your equity in the home is now kind of serving to, and it's kind of being eaten up by the interest.
So that $25,000 of equity that she had is not going to be gone away after a while if the market doesn't increase where she gains that equity. So what happens at that point if they sell the home and they're in the negative of $50,000, since she had the 25 to begin with, but now we're at 50 negative, so actually she's negative 25,000.
Right. So, and really, the 25 is cash that she has available, but they ask her to leave 100,000. That's really what would be getting eaten up by the interest rate.
Gotcha.
Okay, that's the equity that we left and served as a cushion. So, if worst case scenario, there's no equity left at the end. Let's say that you no longer live there, you move to assisted living, and your value has increased to 150,000. But the lender orders an appraisal, they come in and determine the value, and it's 120. So now you have 30,000 more on your reverse mortgage than what you're able to sell it for. So what HUD says and guarantees is that you can never owe more than it's worth. So your family has an option that if they, or the homeowner, if they're still around, is to just do a deed in lieu of foreclosure. And then you just give the house back and you walk away. Nobody's left with the difference of that $30,000 that.
Well, that's really reassuring to know. Now, what about if the house is only in one party's name? They are a married couple. We are in Arizona, so we do have the community law here. However, if the house is only in his or her name and we have right of survivorship after one passes, the one that held the deed in their name, what happens to the home at that point?
Well, then the home is however they have designated it to be left, but the reverse mortgage balance has to be paid off.
Okay, so the remainder person has to deal with the reverse mortgage, either pay it or move, depending on the situation.
Right. And the reverse mortgage is very highly regulated by HUD. And HUD doesn't want anyone to be in a situation where they might be a non-borrowing spouse. So if it is a non-borrowing spouse, that forms have to be signed and acknowledged that my husband is applying for a reverse mortgage, and I understand that I am not going to be on that lien. If something happened to my husband and he passed away, I know that I'm going to have to pay that off. However, I might get that money. Now, maybe I will, if I want to stay in the house, however you get the money to pay off the lien that's outstanding. But HUD puts a lot of protection for the homeowners, and they almost never want someone, if it's a spouse, they want them both to be on title because they want everyone to be fully protected. If husband and wife are on the title, then they want them both to be there to where if something happened to, say, the husband, the wife has the assurance and security to know she's still fine in her home, as long as one of them lives there as a primary resident.
Okay, that is a huge key because I did not know that.
Yes.
So my question would be to you, what would be a red flag if somebody was interested in reverse mortgage? That, we've got a lot of interesting products out there that not everybody is ethically and morally presenting them in the way that they should be presented. What do you feel that would be some red flags for somebody to kind of pay attention to?
Well, with a reverse mortgage, fortunately, it is a HUD product. And so anyone that's going to be doing these has to be approved by HUD, and you have to go through kind of the process of a reverse mortgage. And one of the things that's a real level of protection for the homeowner is counseling. And you have to go through third-party counseling that I have nothing to do with. You're given a list of at least 10 counselors to contact. And I tell my clients that my goal is you learn nothing new in counseling, that I've done my job thoroughly enough to explain the program. And then you go to counseling and it's just another review. But HUD wants to be sure that somebody didn't just knock on the door of an elderly person and put them into something that they didn't need or understand and wouldn't benefit from.
Okay, so there's no fees to go to these counseling classes. There's no fee to set up a reverse mortgage. There's no upfront fees anywhere that someone would, so that way they would understand that, this doesn't cost me to do something if I qualify for the product.
Right. And some counselors do charge, you can charge up to $125. Now, some counselors have grant money from the federal government. And so I like to give those names and phone numbers to my borrowers, and then they can contact that person, you can do it over the phone or in person. The Pima County Council on Aging used to do it direct local here. She's actually not doing it anymore. And so the local counselor here in town is actually not for free. But there are some agencies still that have grant money. So typically the events of how it happens is when somebody gets my name and number and they call me, what I like to do is just meet with them first. And then I explain the program, the process, go over all of that. And if they feel that they would like it to take it to the next step, then counseling is the next step. Then they get that done with, and they are issued a certificate. And that's kind of your ticket to proceed back with me and then do the application. The only upfront cost at that time is the appraisal. And then we order an FHA certified appraiser to go out and value the home. And then the title work is done. And then we send it on to the lender for approval. These are very low document loan. So the only thing that we really need is this counseling certificate that they have gotten, and then a copy of their driver's license and social security cards. And then if the house is held in a trust, then we'll need to see that and get that approved. But otherwise, it's a fairly easy loan. If you have equity and you're old enough, you pretty much can qualify for a reverse mortgage.
Wow.
Yeah.
I have learned a lot. Is there anything else that you could share with our viewers that maybe would either help them to decide on this program and how they would contact you if they were interested?
Well, how they would decide is really just understanding the program. And oftentimes seeing the numbers of how they would work for the particular individual or couple is kind of, I think, the best guide with it. If you have a lien on your home, then that, those numbers can be plugged into the software, and we can just kind of see how it all comes out and if it's a positive number for you. It's, people do these loans for all different reasons and scenarios. I don't think any one of them are alike. But life is expensive. And I think we're all feeling it these days. And I had a client one time who said to me, you need to tell people about this program. People just don't understand it. And I do believe that I do present the honest picture for people. And I feel like if it works for them and they want to proceed, then that's great. But I'm just happy just to explain the program.
Okay. One other thing before you give your information, because I just thought of this. What if the owner of the home is 62 and they have at least 50% equity into their home, but they have somebody younger, either a child or somebody else on the deed of the house, so it's right of survivorship again. How would that work if that person was younger than 62?
They would have to be removed from the deed.
Okay.
Yeah. So, and sometimes you get that where the husband is old enough to do the reverse and the wife isn't. And I think there's reasons that you can feel are safe to proceed that way. But I think it's a case by case. And there's so many times that it just isn't smart to qualify for more money, because the loan is based on the younger person. So if the wife is 70 but the husband is 85, if they used his age, they're going to qualify for a lot more money. But then she has no safeguard to that home. So I would never recommend for her to go off title just to get more money.
Okay, so just so I understand this, and our viewers does as well, then both parties have to be at least 62. Is that correct?
Yes.
Okay.
Yeah, and then again, it's calculated based on the younger person.
Okay, very good.
So
Ms. Tina, tell us how we can connect with you and to get a hold of you if we have a client or a viewer that would like to get a hold of you.
Okay. Well, again, Tina Steele with VIP Mortgage, and my phone number 520-861-2821.
And your email?
Is Tina Steele at VIPMTGINC.com.
And so Steele is spelled S-T-E-E-L-E.
Correct.
Right.
Yeah.
Okay, thank you so much for your time. This was a very educating process and interview. I thank you for your time.
Thank you so much.